So for this part of the audit, we're talking about phase 2, documenting internal controls. So can you, at a high level, talk about what it is to document internal controls and what that looks like?
When we document internal controls, basically the main purpose of that is to provide a clear record of our understanding and an evaluation of an entity's internal control system. Documenting the internal controls helps us support the assessments of the risks of material misstatements, helps as a guide to design of further audit procedures past the planning phase. It's also used as a basis to express our opinion on the financial statements themselves.
Can you give us maybe just a quick overview, definition, or example of what exactly internal controls are?
It's just kind of, the checks and balances that an entity has in place to make sure that things are getting, properly authorized, things are going to their, policy handbook, or just basically things are going to the right level of approval and review before they start getting posted. Depending on the type of audit, we don't usually base an opinion on the effectiveness of internal controls, which would mean that we are actually testing their internal controls. A lot of our clients, we will do walkthroughs of internal controls where we get the documentation and then we pick a small sample and we determine whether those controls are properly designed and implemented and working accordingly.
Essentially, we're not going in there to tell you, yeah, your internal controls are awesome or your internal controls are real bad. We are just going and looking at, this is what your internal controls are, and these are the results of them.
Correct. When we don't test controls.
So if we do test controls, do we tell them at some point, hey, this particular internal thing that you're doing is maybe not ideal, maybe you should consider something else?
Yeah, that's part of it. So if we do detect deficiencies or if we issue findings regarding controls when we test it, usually for us it would be in a single audit situation. We're required to communicate that finding to those charged with governance, management, users of the financial statements can see it when it's reported in the schedule of findings. We'll have our basis for how we came up with that finding, management's, steps for further action on how to remediate any findings, and then any recommendations that we would have for them as well to help remediate the findings. So,
can you provide an example or think of a time when we did do testing of internal controls and made a suggestion about something that maybe wasn't great when we tested it?
Say we're testing a grant program that they use to pay for payroll. And we noticed that, part of the compliance with this grant and payroll is they need to have a certain documentation of wages or in their contracts or something where they might not have had that, where in the grand scheme of things, nobody was paid an incorrect amount. Like the numbers balanced, they tied out to reports, but there wasn't those required aspects around payroll for this grant program. So that would be something where we would communicate like, hey, going forward, if you can get this, or make sure, all these contracts are signed for new employees, that will help remediate this going into the future. We won't have this finding anymore if you can do that.
So just because the outcome ended up being okay, that everybody got paid the right amount, if your process to get there isn't documented the way that you're required, that could cause problems.
It's like in a math class where you've got to show your work. For all the steps, how you got to your number.
Yeah.
You might end up right in the end, but how you got there also matters.
Yeah.
When we say perform a walkthrough of each significant process, can you talk a little bit about what that looks like?
Yeah, so for us, mainly our significant processes that we'll do walkthroughs on are cash disbursements, cash receipts, payroll disbursements, and then journal entry transactions. So cash disbursements, basically payments, expenses that the entity is making. Cash receipts would be money that they're receiving, whether for charges for service or perhaps maybe non-exchange revenues like a grant revenue or a donation or a contribution, something like that. Payroll, it will depend on the client and kind of what their payroll looks like. We'll usually kind of go through maybe a payroll period or a couple for a few employees. We'll recalculate kind of their payroll based off what their approved wage rate is, where we'll obtain their contract if they have one. We'll get a timesheet, see if that was approved by people, punch in those hours and then with their rate, see if what we recalculate is what they were paid or a few cents off. And then journal entries, just kind of taking a look at a sample of journal entries that the client would have posted to their general ledger and making sure that there's a process to review those journal entries by someone not posting them to make sure things are being posted where they aren't supposed to be, whether it's, a fraudulent thing or just for proper recording to prevent any errors or misstatements. So I guess the difference between a walkthrough and a test of controls is when we do our walkthroughs, I guess we don't really have a set number of things we need to look at. And we'll just kind of, okay, you said this was your internal control process. We have that documented. Now we're going to look at a few items, say disbursements, and look at, okay, you recorded $2,000 for this payment. We got the invoice from you guys. It's showing $2,000. It was approved. It was signed. Check has the proper amount of signatures, and then it matches any other maybe supporting documentation they have. When we do test controls, we'll gather a population of what we are testing. So it might be in the terms of like a single audit. If they had $2 million in expenses for non-payroll items, that could be what our total population is. And then based on risk assessments we've set, there's sample sizes that we need to look at things. So a lot of times it's usually 20, 25 or more items that we'll need to look at. And if there's any errors, you might have to pull even more items. And then it's just more documentation and more testing involved with tests of controls rather than just go a general walkthrough.
We also talk about in our proposals that we document identified preventative and detective controls. Can you explain what that is?
It's kind of just general, not like specific control processes that they have set up where there could be board oversight over something. These got to all go through this kind of approval based on the way things are set up, user rights in IT systems, things that are kind of set up already to prevent any kind of errors or any kind of misstatements.
So just kind of a high level overview of these are the processes and controls that you've set in place. And we're just making sure that we understand that this is what they are, or this is what you said that they are.
Mm-hmm.
So is there anything else when we are documenting internal controls from the client perspective that they could do to make the process easier or faster or simpler, not just on us, but on themselves too?
Really, if it's a client we've worked with for a few years, or maybe even a new client after the first year, and we can give them some kind of recommendations on how things can improve, and if they take those recommendations and put them into place, that could help remediate some deficiencies going forward, especially if we do test controls and we find deficiencies one year and have to pull 20 more samples. So looking at if they can remediate that going forward and everything looks good going forward, we won't need to pull that additional samples. We don't need to ask the client for more support. Kind of saves both of us time in that sense.
Is there anything, if we are working with a new client when we get to this stage, that they could do?
That kind of falls on us to make sure we're doing the proper inquiries and documenting things with the client and also the predecessor auditor, getting an understanding before we really start digging into this is what, the controls have been in the past, their processes have been in the past, these are possibly errors or, findings we've had in the past. Getting yourself kind of prepared mentally to know like, okay, this is a new client, let's look out for these. Kind of look out for everything, but keep an eye on these for sure. And unfortunately, for a lot of our clients in our smaller rural areas, they just don't have kind of the personnel or the staff size to remediate some deficiencies. So their hands are kind of tied there. We'll just kind of recommend that they maybe just, implement any controls that they can, possible or feasible. Doing little things like that can help make the process go smoother going forward.
So even if you can't have the staff, if you just have controls and processes in place that we can at least look at, that's probably easier than you're not having to take a bunch of your existing staff time to either answer questions or pull things that just already there.
One thing when we do document and consider internal controls for an entity, we have it noted in our audit reports and also in the engagement letters that, especially when we don't test controls, that, we're designing these procedures for the audit based on our understanding of internal controls and processes, but we might not find all the deficiencies that may exist. That's not like part of the audit process, but we try whatever ones we do identify, we are required to communicate those to governance and management. But our job is, when we look at controls, not to try and find any fraud or anything. Kind of keep an eye out for maybe something that looks weird, but we're not really trying to give them findings or, check for fraud or anything like that.